So in our revision, we are looking at the paper of April 2025. Question number 1 that says A, your friend intends to start running a medium-sized enterprise as a sole proprietor in his local town. He has come to you for advice on the possible challenges he might encounter as a result of operating his business. Required. Advise your friend on 4 possible challenges about the form of business he intends to operate. So, which kind of business is this that he's trying to operate? You can chat. Which kind of business is this? Yeah, this is a sole proprietorship. The sole proprietorship. Remember we said we have different forms of business. We have what we call the company. We have what we call the partnerships. We have what we call the cooperative societies. And now we have what we call the sole proprietorship. This is what we covered in our notes as forms of businesses. But in this question, the examiner wants us to cite the challenges of sole proprietorship. Now, if you peruse your notes where we discussed about the forms of business, you will be able to see that we discussed the sole, that was our second lesson. We discussed the sole proprietorship, we discussed the advantages, and we discussed the disadvantages. So the answer to that, when they ask us to cite the challenges of a sole proprietorship business, the challenges of a sole proprietorship business. Number 1, we said there is limited resources. Limited resources. That is one of the challenges that a sole proprietor will encounter. Number 2 is lack of continuity. Lack of continuity. That is, in case he's sick or he's held up in something else or eventually he dies, that business cannot continue. Number 3, that is also a threat, is unlimited liability. Unlimited liability. What that means is that akikuwa na madeni, the creditors can come right into his house or her house and seek to be paid. Then, lack of managerial expertise. There is lack of managerial expertise. Managerial expertise. As in, he's not able to manage everything. One person cannot be an expert in everything. You may be very, very good in marketing, for example, but very weak in finance control. You may be a very strong guy in finance, but very poor in administration. So those, and then we said unsuitable for large scale operations and suitable for large scale operations. So when we have okay, so those are the challenges that you can encounter as a sole proprietor. The sole proprietor. So we had been told to state 4, so we already have given 5. Higher. Let us go to part B. John Martin wishes to register a company that will offer cleaning services. He is not sure on how to select a name for the company, as he is afraid that the name he wishes to use might be rejected. He has come to you for advice. You are therefore required, with reference to the above statement, describe 6 circumstances when the registrar of a company might reject a proposed name. Circumstances under which a name can be rejected. Again, if you go to our notes on where we talked about formation of the companies, that is in topic 2, formation of the companies. We talked about the various steps that are required for you to form a company. And the first step that we gave was step number 1, which we called name search and preservation. Steve, good evening.
Good evening.
Karibu sana.
Asante.
So we said here that there are several reasons why the name can be rejected. So we gave several. So the examiner wants 6 reasons. So reasons why a name can be rejected. Why a name can be rejected. Reasons why a name can be rejected. Again, if you are there in our notes, you'll be able to see that the use of the name constitutes an offense. The name constitutes an offense. It constitutes an offense. If we continue using that name, it is offensive. It is offensive. The name is offensive. Edwin, good evening.
Good evening, sir.
Karibu sana.
Asante.
So we are revising the paper of last sitting, Edwin and Steve, revising the paper of last sitting. We are now in question 1B. No. So that is the first instance if the name is offensive. The other thing that we said is that the name is similar. It is similar to that of an existing company. If the name is very similar to that of an existing company, it will be rejected. If the name is very, very similar to that of an existing company, it will be rejected. Another reason is it contains initials not authorized by Act. Initials not authorized by the Act. Not authorized by the Act. It contains initials that are not authorized by the Act. Like I talked of the GK. My name is George Kimani, so I can use GK. But now GK is ordinarily used for the government of Kenya. The other one is signs or symbols not prescribed in the law. Signs not prescribed in the law. In the law, signs or symbols that are not prescribed in the law. Another reason is that the name is misleading. The name is misleading. The name is misleading. You know, like there are two very common sites, which I know you know. There is one that is called Hell's Gate. Sometimes back, we were planning for a trip to Hell's Gate, and some people are fearing, are you taking us to hell? So someone may think you are taking them to hell. There is also another site known as Heaven's Gate. Some people go there excited, and they will tell you, nimekuwa kwa mlango, ama kwa mlango ya mbinguni, Heaven's Gate. Yeah. So, I don't know what to say, whether they are misleading or not. Let me confine myself to the company. You can form a company, like now you can open a college and say guaranteed pass rate college. Yeah. So, you are telling students that if you join my class, lazima upite. That's misleading. Yeah. There are many factors that can make a student to pass or even to fail. There are very many factors. So you cannot tell people that I'm assuring you 100% that when you join my class, you will pass. So the name could be misleading. The other one is that impression that is associated with government. There is impression that it is associated with government. So if you are creating an impression that the institution is associated with government, like what we said, nifungue college niite Nairobi County College. So people can think that that college has anything to do with the county government, but it's not having anything. But venye umeiweka inakaa kama hiyo kitu ni ya serikali, but it's not anything to do with serikali. So those are some of the reasons why the name can be rejected. So as you advise your friend, you tell him to check that he is not anywhere near any of those items. Haya. So having said so, the next question inasema at C. Kitabu Limited, a private company incorporated in Kenya, is contemplating extending a loan to one of its directors, James Motiso. The loan is intended to assist James in purchasing residential property in Ruda. Now, advise the board of directors on 5 legal requirements of providing such a loan. You advise them on how to go about providing such a loan. You remember we covered this when we discussed about directors, and we said that a company should not advance loans to directors. It should not advance loans to directors. We looked at that. We said we looked at the topic we called subtopic we called loans to a director, and we said that a loan is any money that a director takes from the company and is not either a salary, it is not a dividend, or it is not a refund for a legitimate expense. Then we also said that a company may not make a loan to a director unless the transaction has been approved by the resolution of members of the company. However, a company can provide loans to directors under the following circumstances. So we are saying here, number one, the very first point is that it must be approved. Swali imeuliza the directions that should be followed in awarding this loan. Number one, it must be approved by members. Approved by members by a way of resolutions. Yeah, so it must be approved by the members. Yeah, so members must be told that our director Motiso is asking for this amount of money, and they must approve before it is awarded. Now, the other one is that should not exceed 1 million. Not exceed 1 million. Should not exceed 1 million. So now this guy, nimeona anataka pesa ngapi? Let me check again. Nimeona he's asking for, hawajasema ni ngapi? Okay, hawajasema. Na ni wapi niliona 10 million? Ama ninaota na 10 million. Okay. Yeah, so the amount must not exceed 1 million. That is something we said. The other thing is that lending is part of the business of the company. So lending is part of their business. Lending is part of business. Yeah, so that is what they do. Maybe it's a bank, it's a microfinance institution. So that is what they do to any other person. So if they give loans to other persons, then they can also give the loan to this director. The other thing is that the company is a subsidiary. So the company is a subsidiary. He is a subsidiary to a company that is managed by Motiso. So this Katibu ama whatever limited they are calling it, it must be a subsidiary, or it should be a subsidiary. Or if it's a subsidiary, that can easily be considered. And the other thing that you need to check is that The other thing is that the nature of the transaction must be, or there must be disclosure. Disclosure. There should be disclosure about the nature of the loan. We should be told the nature, we should be told amount, and we should even be told the purpose. There should be disclosure in regard to that loan. So those are some of the points that you could discuss. Let me see what they wanted. They wanted 5 legal requirements. Yeah, so those are legal requirements that you could mention, that it must be approved by members. It must not exceed 1 million. Then it should be that this company is in the business of lending, and the company is a subsidiary, and the other one is disclosure. Now, we are not saying that you must satisfy all this at a go as a package. No. When we satisfy one of them, it's still sufficient. Still sufficient to give the loan. Okay, so say that it is only those who are in that business can give. No. As long as you have disclosure or all the other possible requirements can be met, then you are good to go. You're good to go. The next item that we are told to discuss, the meaning of CDS. The meaning of CDS. When we covered the issue of shares, I gave you an assignment to write short notes on CDS. So I don't know whether you wrote the short notes. Now, if you wrote the short notes, then you are able to say that CDS is a computer system. Maybe you can write that if you never wrote. CDS, or Central Depository System. Central Depository System is a computer system. Is a computer system that facilitates. Sorry. So we are saying that CDS is a computer system that facilitates holding of securities. That facilitates holding of securities in electronic accounts. In electronic accounts. And facilitates faster and easier processing of transactions. And facilitates faster and easier processing of transactions. Yeah, that's the meaning of CDS, the Central Depository System. I told you to write short notes on that. To write short notes. So that is the meaning. CDS, Central Depository System, is simply an electronic way. So 6 duties of a Central Depository System. the duties. The duties, one is convert physical certificates into electronic form, is to convert physical securities certificates into electronic form. Yeah, that's one of the duties. It's called immobilization. They convert the physical certificates into electronic format. Number two, they open and maintain security accounts. They open and maintain securities accounts for stakeholders. When we talk of stakeholders, we are talking of the clients like you and me when we go to buy shares. And we are also talking of the brokers, the stock brokers, the dealers, the ones that sell on behalf of the company. So those are the capture of the word stakeholders. So CDS is able to do that. Number three, facilitates electronic transfer. It facilitates electronic transfer. It facilitates electronic transfer of these securities. So if I want to sell my shares, I'm able to sell. If I want to buy, I am able to buy, and so on. Number four, manages. It manages corporate actions. Corporate actions. Now, when we talk of corporate actions, such as we are talking of dividends, bonus issues, rights issues, etc. You'll find that the CDS, through the image registrar, is a body called image registrar. They're just here in town at the bazaar. I mean, not the bazaar, at the Barclays Plaza. You'll find them there. That's one of the things they do. Another thing is that they generate reports and statements. They generate reports and statements. They generate reports and statements. If you want to know what is the status of your account, they will generate reports and they will give you the statement to see. Another one is they create investor-friendly environment. They create investor-friendly environment. Yeah, they have a role of encouraging people to trade in shares. Yeah, so those are some of the duties that you'll be able to find being executed by the CDS. Haya, part 2 or part B of question 2 inasema discuss 6 rights of members of a registered company. 6 rights of members. If you go to your notes where we talked of rights of members, you'll be able to see them very, very well articulated. Rights of members. And I told you we have several categorizations. But in an exam like this one, you don't have to categorize them. You don't have to categorize them. You don't have to categorize them. You only need to come here and let me see, they're asking for how many. They have said we give them 6 of them. We give them 6. So if they're asking for 6, number 1 is to receive dividends. That's a major right. Receive dividends. That is a primary right. You cannot deny. You cannot deny that. The other one is attend meeting. Attend meeting and vote. Attend meeting and vote. Yeah, that's also a right, a primary right. You cannot deny that. Another one is get proportionate capital liquidation. Get proportionate capital on liquidation. Get proportionate capital on liquidation. Another one is receive notices of meetings. Receive notices of meetings. Yeah, receive notices of meetings. That is a right that you cannot deny the member. Another one is receive copies. Receive copies of audited financial statements. Financial statements. Receive copies of audited financial statements. Another one is inspect minutes book. Inspect minutes book. Yeah. And you can continue with the list. There are many. There are others like to petition against discrimination. You can appoint a proxy to a meeting. You can request the directors to call for a meeting. You can apply to court for rectification of any inconsistency. You can apply to have the name of the company changed. You can apply to change the memorandum. Yeah, so when you go back to your notes, you'll be able to see those items as we discussed. Those items as we discussed them. So we are done with question 2, but unless there is any concern, we need now to close to question 3. Inasema, ABC Corporation, a publicly traded company in Kenya, intends to consolidate its share capital and simplify its capital structure by varying the rights attached to its multiple classes of preference shares. However, some preference shareholders are opposed to the proposed variation, arguing that it would unfairly prejudice their interests. Now, discuss the legal principles and considerations involved in determining the permissibility of the variation of class rights in this scenario, taking into account the rights of dissenting shareholders and the company's directive. So if you again go to our notes, there is somewhere we covered something we called variation of class rights. Variation of class rights. If you open there, you'll be able to see the variation of class rights. We talked about it. Variation of class rights. variation of class rights. Hope you are there. So if you are there in the variation of class rights, we are told to discuss the principles that guide that. So tulisema the rights can only be changed if members have consented. So number one, members must consent in writing. Members must consent in writing. That's a very key point. So these members must consent in writing, not by word of mouth. Number two, it must be an agreement. Agreement with articles of association. It must be an agreement with articles of association. It must be in agreement with articles of association. It must be in agreement with articles of association. Then it must be approved by at least 75%. Approved by at least 75% of holders of nominal value. Yeah, of nominal value. Of nominal value. There is also another point that it must not require a higher liability. A higher liability. Yeah, it must not require that the members who are affected will now have to shoulder a higher responsibility than they could previously. So those are the 4 points that you're supposed to argue there and get your 8 marks. Discuss 6 classes of debentures. So let's go to our notes and look at the classes of debentures. Classes of debentures. Classes of debentures. We are told to describe 6 of them. We are told to describe 6 classes of debentures. So if you are there where we talked about the types of debentures or the classes of debentures, number 1, we talked of secured debentures. We talked of secured debentures. So there we would expect a candidate to tell us that these ones are secured by some charge. Yeah, there is a security behind it. Yeah, so when you are told to describe, we expect you to say that there is some charge or there is some collateral that is behind it. The other one is unsecured. Unsecured. So unsecured here, there is no charge or there is no collateral. There is no charge or there is no collateral in that debenture. There is also what we call registered debenture. Registered debenture is a debenture that is payable only to the person who is registered. There is unregistered or the unregistered or the bearer. Hii ni mwenye ameileta kwa kampuni, hiyo ndiye atalipwa. The one who has brought it is the one that will be paid. Is the one that will be paid whatever money that requires to be paid. Whatever money that requires to be paid. Then we also have another one called redeemable. Redeemable debenture. This is a debenture that you'll be able to pay back. You'll be able to pay back. I think in FM yesterday, we had a question where we were computing the value of a redeemable debenture. I think ilikuwa na miaka 3, something like that. And then we have the irredeemable. Irredeemable. Yeah. Those are the 6. Those are 6 types. But as you can see in your notes, we also have what we call convertible and non-convertible. Yeah. But the examiner wanted 6 of them to be stated by the candidate. He wanted 6 of them. So look at question 4, just a minute. Okay, so I believe you have looked at that. Types of resolutions. Types of resolutions. Resolutions. If you go to where we discussed about meetings, yeah, we said there are 3 types of resolutions. So the examiner here is asking us, explain 2 ways in which the type of resolution affects its approval. So you are supposed to give us the type of the resolution. Number one, there is what we call ordinary resolution. Now, ordinary resolution, the approval is simple majority. This one requires simple majority for it to be approved. The approval is just simple majority. Simple majority for it to be approved. Then we also have what we call special resolution. We mentioned that. Special resolution. Now, special resolution, we said, is a resolution that requires at least 75% of the shareholders to approve it. Special resolution. Inataka not less than 75% of members to approve it. Then we have a resolution that requires special notice. A resolution that requires special notice. A resolution that requires special notice. And we said this touches on the very weighty matters. And now this one, the special notice, we are not told what percentage is required for its approval, but we are told the notice must be given at least 21 days. The notice must be given at least 21 days for it to pass. Okay. Now, advise the board of POF Limited on the requisite steps drafting a company resolution to avoid future problems. How to draft the resolution. How to draft the resolution, or how should a resolution be done so that we do not have any problem in future. Now, a resolution is obviously made in a meeting. A resolution is obviously made in a meeting. So number one, there should be what? Proper convening authority. Number one, you have properly convened meeting. Properly convened meeting. You must have a properly convened meeting. Properly convened meeting. Then number two, you must issue proper notice. Proper notice. We discussed about the requisites of giving a notice. Tukasema the notice can be in hard copy, it can be electronic, it can be by website, it can be a combination. And you can send through post office or physical delivery or even electronic, or you can advertise in the media or even again put it in the company website. So you need to have that. Then after people gather, you ensure that there is requisite quorum. There is requisite quorum. There is requisite quorum. We said quorum is the number, the minimum number of persons who should be present in a meeting for the resolutions of that meeting to be binding. Higher. Then from there, there should be a proper chair. There should be a proper chair. And we said a board should have a chair. someone who chairs the meeting, and the deputy. And in the event that the deputy is not there, in the event that the chair is not there, the deputy chairs the meeting. And in the event that the deputy is not there, the members who are present, they select temporarily a person to chair the meeting for that day. So there must be a proper chair. There must be a proper chair. When we say proper, we start number one, the duly elected chairman. Number two, the deputy. So kama sasa hawa wawili hawako, we now have a person selected. But we cannot have a deputy chair when the chair is there. Not unless the chair mwenyewe amempea express permission. Kamwambia, I am here as the chair, but nakuomba kama mdogo wangu, you chair the meeting. Yeah. Or even both of them are there, the chair and the deputy, then they say, for some reasons, wacha fulani leo atuongoze mkutano kama chair. Yeah, so that is what we mean by proper. Then, the resolution should be registered. First of all, we can talk of minutes, minuted and registered. Although some of the resolutions may not need to be registered with the registrar, but the resolution must be minuted and must be registered. The other thing is that there should be proper voting. In case there was any dispute, there should be the issue of voting. So the board of directors must ensure that they take those steps in order for them to be deemed to have passed the resolution in the right way. Haya. Part B, summarize the process of the removal of a company secretary from the office in your country. So let's look at company secretary. Let's look at company secretary. We go to the topic where we talked about company secretary. Company secretary. So company secretary, if you are there in your notes, we gave the steps of removing a company secretary. We gave the steps of how to remove a company secretary. We gave the steps of how to remove a company secretary. The steps on how to remove a company secretary. So number one is you convene a board meeting. Number one, you convene a board meeting. Obviously, after receiving the complaint from whoever, you convene a board meeting. Then number two, you invite the secretary to make presentations. You invite the secretary to make presentation. So presentations ni kujitetea. Obviously, by the time the meeting is being called and you're inviting him, you have alerted him that these allegations have been made against you and there is a request that you be removed. So come and speak your position on the same. Then you again, after the guy has been invited, you convene another board meeting. The second board meeting. You convene a second board meeting. Another board meeting. Now, this is where you consider the presentations that have been made by the secretary. but you are not considering so that you say yes or no. You just look at the merits and demerits and just be familiar, just be acquainted with them. And once you are acquainted with them, you now call. Once you look at the presentations, if you accept them, then the secretary continues. If you reject them, then you appoint a new secretary. Then you inform the registrar. In case there is a new one, you inform the registrar. You inform the registrar. You inform the registrar of that, and then you inform the stock exchange. You inform the stock exchange. You inform the stock exchange. Okay, so the last one is you make the relevant entries. You make relevant entries. You make the relevant entries in the books of what has happened. Yeah, so you can discuss any of these five, any of these, in any five of those 6 steps, and you are able to get the 10 marks. Question number 5 is talking of outline 5 contents of an auditor's annual report. Tulisoma hiyo maneno. Contents of auditor's report. Again, if you look at our notes, we discussed that the contents of the auditor's report. The contents of the auditor's report. It is there in our notes. We are given 5 marks, so that means maybe they just require we give 5 items. But we know the contents. If you look at our notes, we gave the contents. 1, we said there should be the auditor's opinion. One is the auditor's opinion. He should tell us what he thinks, whether the statements represent fair and true and fair view of what has been happening. He should also give us the scope and methodology. The scope and methodology. What did he look at? And methodology. Methodology. What did he look at? To what extent? And what methods did he use to gather the information? And when he did that, what are the findings? What's the evidence and the impact? You need to tell us this is what we found out. And this is the evidence. And then this is the impact. This is impact. At times, if it is a risk, the auditors will classify and tell you this one is a high risk, this one is a medium risk, this one is a low risk. They will even propose who should respond to that. So they should tell us the findings, the evidence, the impact. They should also state their responsibility, auditors' responsibilities. In their report, they should say that we are doing this and the following are our responsibilities. And the key two responsibilities are: number one, to ensure that there is professionalism in what they are doing. Yeah, whatever they shall do, they should do it in a professional way. Number two, they should familiarize themselves with the expectations of the clients. Yeah, what does this client need from me? You need to be familiar with that. Closely related to that, you must state the management's responsibilities. The management responsibilities. The management's responsibilities. So you must say that we are going to audit your company and we expect you to give us books, we expect you to pay, we expect you to do this or not to do this. Something else is that there should be explanations of matters. Explanations of matters. Yeah, so if there are issues that needs to be explained, the auditor needs to come out in a very effective way, and he should tell us. Another one is the basis for opinion. How did you arrive on your opinion? What's the basis for the opinion? You need to tell us. And then you need to tell us whether there was other reporting responsibilities. Were you given an extra duty to perform in regard to this? And number 9, we say there should be signatures. There should be signatures and dates so that you're able to know how old the statement is and so on. So those are some of the contents of an auditor's report, which are already in our notes. Highlight 7 responsibilities of an auditor in your country during the audit process. The responsibilities of an auditor. Again, that is still the same topic. Ukirudi hapo nyuma, no, the previous topic. I think it's the previous but one, because the previous is about the directors. We must be having the one for that is topic 10. Topic 10 is the one that talks of the auditors. So the duties of auditors or the responsibilities of auditors, we are told to mention 7. We are told to mention 7 of them. 7 duties or responsibilities. Yeah, one is to make himself well acquainted. Well acquainted. Well acquainted. Well, there is an A here. well acquainted with the expectations of the act and the client. So you must be able to know what is it that the client expects of me. That's your responsibility. What does the company's act require of me? Number two, you make a report to the member. Make a report to members. Make a report to members. That is a cardinal responsibility of an auditor. He must tell members that I have audited these books and this is what I have seen. Next is certify statutory reports. You certify statutory reports. Yeah, remember we said statutory report is the report that is given. The report that is given after 1 month since incorporation. And it must not be after 3 months. So in the second month and the third month, somewhere there, you must hold what we call statutory meeting and give this report. It's supposed to be signed by the directors, and then the auditor comes and certify that I have looked at the report and it represents a true and fair position. Next is prepare a report to be included in the prospectus. Prepare a report for the prospectus. For the prospectus. We say the prospectus is a legal document that offers or that invites the public to come and buy shares. And we said that it should contain relevant information at least for 5 years. And this information, because it's generated by insiders, the managers, the directors, we require an external person who is now the auditor to come and say that for sure what these guys are saying is okay. The other thing is perform professionally. So in whatever he's going to do, he must act in a professional way. He must uphold high levels of integrity. And closely related to that is comply with auditing standards. Comply with auditing standards. Comply with auditing standards. Comply with auditing standards. Yeah, so those are things that are expected. Those are things that are expected of the auditor. But now you can continue with that and find we have to report fraud, ensure there is safety, there is safe custody of the securities of the company. You assist auditing other branches, and so on and so on. Good. Financial statements of company typically include some key components as required by the International Financial Standards. Describe 4 of these key components. 4 of these key components. Now, when you look at the notes that we covered, there is what we call the components of financial statements. And we talked that a financial statement should have the income statement. We should have the statement of financial position. Yeah, we said we should have the the statement of profit or loss, the income statement. There is also the statement of financial position. Financial position, that's the so-called balance sheet. Then we also talked of cash flow statement. Cash flow statement, there should be a cash flow statement. All these things, you know how to prepare them. Another one is statement of changes in equity. Changes in equity. And the assets movement schedule. These are key components. The assets movement schedule. The assets movement schedule. So those are the key components of the so-called financial statements. But a student could also interpret it like this. You could also interpret that like this. That when we talk of the statement of financial position, statement of profit and loss, there should be revenue. Number two, there should be cost of sales. There should be cost of sales. Number three, there should be administration costs. Administration costs. And number four, there should be selling costs. Those are the key components. Actually, when you are dealing with the cash flow statement, and you know this because you are doing financial reporting, when we are doing the cash flow statement and tukopale kwa the operating activities, these are the four things that we look at: the revenue, the cost of sales, administration, selling costs. Then ukiingia kwa statement of financial position, then you must tell us about assets. You must also tell us about liabilities. And you must finally tell us about capital. Yeah. Those are the things that must be incorporated. And these are the ones that you will now find in all these. You'll find them there. Yeah. So a candidate could also have interpreted it like this one. Yeah. Question 6. 4 types of liquidation. Identify 4 types of liquidation. So let's go to where we covered liquidation in our notes. Liquidation. 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 Now, if you are there, where we covered, the other one is talking of duties of a liquidator. Okay. So when you look at liquidation, we said there is number 1, members voluntary liquidation. Members voluntary liquidation. This is where members wenyewe wanapitisha, wanasema hii kampuni tufunge. We discussed about it. Number 2, there is what we call the creditors voluntary liquidation. Although this one is usually debated whether it's voluntary or involuntary. Yeah, voluntary or involuntary. Then there is what now we call the involuntary or the compulsory liquidation. Those are the three that we mentioned. But we also have others that we never mentioned in our notes. One is called partial liquidation. This is where you liquidate just one part of the company. And the opposite of that is called complete liquidation. So these two, we never included them in our notes. Partial is where you just close a bit of a segment. Complete, you close the whole thing. So this is also another way of looking at it. So when the examiner asked about the types, those are the things that should have been mentioned. So now, the next thing we are told to talk about the powers of the liquidators. The powers. So we mentioned the powers of liquidators, or the powers and money duties. What is it that I've seen? The duties or the duties of a liquidator. I think we discussed some duties of liquidator. Let me see whether we discussed that. The powers. So we did not call it duties, but we called it powers. We called it powers. So powers or duties. Powers or duties or responsibilities. Let me include that word in my notes. So one, we said verify claims by creditors. Number one, he should verify claims by creditors. That's the power. He has a duty to verify. Hakikishe those claims are genuine. Number two, control company assets. Control company assets. He has a duty to control the company assets. We said when the liquidator comes, he takes over the control of the asset, then evaluate assets and make a report. Evaluate the company and make a report. Let me just talk of that. The company and make a report. The company and make a report. He is supposed to do that. Akifika tu hivyo, anachunguza hiyo kampuni, he makes a report. Next is protect the assets. He has the responsibility. Since the appointment, he has the responsibility to protect those assets that he has found there. They should not change hands in a manner that is not prescribed. He also has carry on business. He has the power to carry on business. Although this is very, very rare and the chances of success are very remote. By the time liquidator anaingia, watu kama receivers, the administrators wameshindwa. Umeona hii kampuni, you cannot bring it back to life. But all is not lost. You never know. We could get someone as a liquidator and they're able to bring a successful turnaround strategy. Something else that we said the liquidator can do is he has the power to sell the properties. Actually, this is the main duty why he's appointed, to come take over the assets and sell them, then distribute the money to the creditors, na kama kuna yenye itabaki apatie the shareholders. Now, in relation to the corporate structuring, explain the following concepts. Now, I gave you an assignment on this, and I still want you to rely on it, on your answer to the assignment. Nilikwambia I think mergers we discussed, mergers to discuss, but these others, compromises, arrangements, reconstructions, and amalgamations. Hizo utabidi uangalie from what you wrote. From what you wrote, so that niangalie question 7 kwa tumemaliza hiyo. I give you an assignment on part C. That's the beauty of doing the assignments. When they come in the exam, you are able to respond. But kama uliandika tu assignment na ukaiacha, then kwa mtihani utakuwa tu nakumbuka nikisema do these assignments, ukaiachia hapo. So make sure you do the assignments that I gave you. They are not compulsory, but they are necessary. Yeah. Haya. Then question 7 inasema with reference to the Companies Act 486, describe 5 circumstances in which the name of a registered foreign company can be struck off from the register. Yeah. The circumstances. The circumstances under which the name can be struck off. Yeah. So, they are saying we discuss 5 circumstances under which the name can be struck off. There are many circumstances. One is no longer carrying business. No longer carrying on business. So, kama umesimamisha biashara at least for 4 years. They say for 4 years, kama ulikuwa unafanya biashara na miaka 4 you are not doing anything, you should be struck off. But tangu kuwa registered, if 1 year is over na hujafanya biashara, you should also be struck off. The other one is you no longer have a place of business. You no longer have a place for business. A place for business. Kwenye ulikuwa wamekufungia ama kumekuwa converted to something else. So you no longer have a business place. Another reason why a foreign company can be closed is failure to appoint. Failure to appoint a local representative. We talked about this. And we said what should be the duties of a local representative. So if within reasonable time you have not appointed, you'll be registered. The other reason is dissolution. Dissolution in the home country. In the home country. If in your home country you have been dissolved. So even here, unangolewa kwa our vitabu. The other reason is failure to respond. Failure to respond to a letter or to a correspondence by a registrar. So if the registrar has written a letter and you are told to respond for whatever reason it is, then if you do not respond, you can be struck off. Another reason is voluntary liquidation. Voluntary liquidation. If you have gone there as members, na mmesema sisi as foreigners, hii biashara imetushida, we want to go back home or we want just to remain here, and not do business. Another reason is that name is misleading. Yeah, the name is misleading. Yeah, the name is misleading, and we have already mentioned that. Finally, we are told explain 5 reasons why the appointment of an independent inspector would prevent the issue from escalating. So nimeskip kusoma hiyo. I think akili yangu imesonga haraka because nataka tumalize na time ndio hiyo. But what you know very well is that there will be what we call company investigation. There is what we call company investigation. We looked at it and we said what it is. Now the question is asking us, once we have appointed an investigator, maybe something was happening. Remember, we said one of the reasons why, or the reasons why we appoint an investigator is to come and confirm that for sure a fraud or an offense has been done. Then number 2, gather evidence so that appropriate action can be taken. So just come and confirm that ni kweli pesa imepotea. Then, where is the evidence? Who stole the money? How did it disappear? So that now from there, we are able to take the right action. So when we appoint an independent investigator, the issue can stop. The issue can stop. So what are some of the reasons why it could stop? 1, there is unbiased assessment. Unbiased assessment. We expect that this person who is coming in will not be biased. So things will stabilize. Mtu anapewa nafasi. We give them time to see what they can do. Number 2, there is increased trust and credibility. Increased trust and credibility. This person who has been appointed is perceived to be trustworthy, to be faithful, and people receive the person well. And some of those things that have been happening will stop. Another one is enhanced accountability. When we have a new sheriff, that is the word they use. We have a new sheriff in town. Tuko na mwangalizi mpya katika mji. So there is increased accountability. There is also a possibility of early detection. Possibility of early detection. When we have an investigator, we are able to detect so that we are not left asking, when did the rains start beating us? When we have an investigator, we are able to look at that well, and then it also increases transparency. There is increased transparency. Increased transparency. There is increased transparency in the management. So I think those are some suggested solutions from my end of how the candidate was supposed to respond in that paper. So I don't know whether there is any concern. If you are okay, say my yes. If you have any concern, raise it. Yes, Bora is okay. What about the others? There's Edwin, there's Janet. Okay, so if we are good, we are going to stop there for now. Let's meet in our next lesson to look at the next paper. Thank you.